Okay, let's take a look at the question 6. Question 6. So this is a bunch of questions, 3 sub-questions. So Dave May Plus company has a piece of equipment with an original cost of 1.04 million. The equipment's carrying value at the beginning of the year, net of cumulative depreciation, was 1 million. During the year, they recognized 120,000 for depreciation. The fair value at the end of the year was 1,056,000. This is the first year the company has revalued this equipment. That means previously they did not recognize as loss or revaluation surplus, right? Because this is the first year for revaluation. To record the journal entry for revaluation adjustment, assuming they are using proportional method. Remember, you can use 2 methods, right? That's either elimination method or proportional method. Okay. Let's do this question. Okay, so the cost of the equipment, that is 1.24 million. Okay. For the cumulative depreciation account, we know that the net carrying value at the beginning of the year is 1 million. So the value net of the cumulative depreciation at the beginning of the year is 1 million. That tells me that the cumulative depreciation at the beginning of the year must be 240,000. And the net of that should get 1 million. And you're gonna, during the year, this is the beginning of the year. During the year, they recognized 120,000 depreciation. So at the end of the year, you have 36,000 balance, 360,000 balance for the cumulative depreciation. Okay. And the fair value is at the end of the year is 1,056. What's the carrying value at the end of the year? The carrying value is your cost minus your cumulative depreciation. At the end of the year, your carrying value is, the difference is 80,000. Your carrying value is 80,000. Your fair value is this. Okay. Now I need to calculate the ratio, right? I need to calculate the ratio. What's my ratio? The proportion, right? The proportion. So if I use 1,056,000 divided by 88,000, this tells me this is a 1.2. Okay. Okay. So basically, your fair value is 20% higher than the carrying value. Okay. So when we do the proportional method, okay, debit equipment, you credit cumulative depreciation on equipment. Okay, so you are going to make this adjustment to reflect the 20%, right? 1.2, that means it's 20% higher, right? So basically, what I will do is I'm going to use 20% times the cost of the equipment. So this is going to be 248, okay, 248,000. And here, I'm going to use again 20% times. Note your cumulative depreciation is 360,000. Okay. That's going to be 72,000. There's a difference. The difference is 0.0671. Okay. So you need a credit of this, right? You need a credit of this. This will be your OCI, right? OCI, revaluation surplus. Okay, this is my proportional method. Okay, proportional method. The next question. Three sisters company purchased land for 900,000 some years ago. Fair value was 800,000 at the beginning of this year and 1 million at the end of this year. Prepare the journal entry to record this year's revaluation adjustment. Okay. Just give me 1 second. Okay, so if I draw a picture, graph, okay, so basically, when you first buy it, okay, some years ago, okay, originally, this is 900,000. That's how much you paid, okay. Here, this is the beginning of this year, current year. This is ending. Okay, so the beginning of current year, that's the value is here, 900,000. Okay, and then ending here, 1 million. Okay. So we are recording this year's revaluation adjustment. Okay. So in the beginning of the year, your value is 800,000. At the end of the year, you want to make adjustment to make it to be 1 million. So you're going to debit and increase from 800 to 1 million. That will be 200,000, right? Increase. You debit land for 200,000. Okay. And now you want to know what's the cumulative. Is this a cumulative loss or cumulative surplus? So to know that, you compare the current fair value with the original value, right? So your current value is 1 million. The original value is 900. So you have a cumulative surplus. Okay, so you're gonna credit OCI, right? Revaluation surplus for 100,000. Right? That's your cumulative valuation surplus. So by comparing your current value with the original value, right? And now to make this journal entry balanced, you need another 100,000 credit, right? So what's this? What is this, right? It has to be gain, right? It has to be gain. That will be the gain on land revaluation. And this number will go through the income statement. Okay, So that's my question for 6B. Make sure you know this. Question for 6C. Question for 6C. No wet, no debt. Rainboats uses 3 different machines, A1, 2, 3, to manufacture raincoats. These machines are considered to be a cash generating unit due to climate change and changes in consumer preference. Demands for raincoat has declined in recent years. That's an indicator for me to maybe, consider whether we need to do an impairment test, right? So let's take a look. We evaluate this as a unit. Okay. So recoverable amount. My recoverable amount equals the higher, right? The higher of the fair value less selling cost and the value in use. That would be the higher of these two, right? 3 million and 2.7 million. So that's the higher 3 million. And what's my carrying value? Carrying value is this, 3.4 million. So my carrying value is higher than the recoverable amount. I need to do an impairment loss recognition of 400,000, right? The next step is that I'm going to allocate this from machine 1, 2, 3. How should I allocate this 400 impairment loss among the 3 assets, right? Remember, if there's goodwill, so first try to allocate everything to the goodwill. If there's still anything left, you are going to go with, only the items that have impairment loss, have impairment, and based on their proportion of the carrying value, right? So if you take a look at 1, 2, 3 machines, you want to first evaluate if which machine is impaired, right? So here, carrying value is 800, fair value is only 700. That's an impairment. 1 is impaired. 2, so the fair value is higher than the carrying value, right? So this one is not impaired. Number 3, carrying value is higher. So this is impaired, right? So I can only allocate between 1 and 3, right? This 2 is not impaired. Leave this alone. So what's the proportion, right? This proportion is calculated based on the relative proportion of the carrying value. So carrying value for 1 is 800,000. For 3, that's 1,170,000. Okay, using the carrying value. Okay, here's the carrying value. So then I want to calculate what's the percentage, right? Total is 1,970,000. What's the percentage? 800 divided by 1,970. Okay, so this one is 40.61%. So of course, the other one will be 59.39%. Okay, so that's how I do the allocation. So if I times 400,000, so for this one, I will allocate 162,436. Okay, so that's for machine 1, and the difference will go to machine 2. So that's 465,732. This is machine 3, and this is machine 1. And together will go equal to 400,000. Okay. So if you take a look at my entry here, okay, I recognize my impairment. You debit impairment loss from machine 1, 162,437, and you credit cumulative depreciation for 162,437. In chapter 10 questions, some student was using the wrong accounts. Okay, I provided the feedback. Make sure this is not a revaluation, right? This is an impairment testing, right? Some students are using this accounts for the revaluation. This is the impairment test. Okay, so you debit impairment loss, credit the cumulative depreciation. Okay, so that's my last question. Good luck with your study. Okay, good luck with the study.